let's take a look at this from a day trading perspective. We're on an hourly chart. So we have a 4-step process that we follow here with here at Tier 1 Trading. It's called IPDE. And it stands for identify, predict, decide, execute. So I want to use my higher time frame, whatever that may be for you, to identify what price action is doing, what price action has done, where is price action currently trading at. Based off what I identify, I then want to make a prediction. If price action has done this, then we're likely to do this next. And that prediction is kind of a 3-part prediction. It's what direction is price likely to go? If price goes in that direction, where is it likely to go? And then how is it likely to get there? The decision point is more specific to your rules, meaning that, hey, I've decided that I'm going to look for a trade continuation trade. Well, therefore, I need a double bottom to enter the trade, and then execute is entering the trade. So we look at here, and let's do this together. Identify, we're on the pound dollar 1 hour, so we're going to be day traders. We're going to go from the 1 hour down to like the 15 or the 5-minute chart. We are day traders on the 1 hour hourly chart. What do we identify? What would you guys say? Type it in for me. Type it in. I see trend, I see trend. All right. So price action wasn't a short-term bearish trend, but what else? Ah, that's the answer I'm looking for. Yeah. The trend is okay in this situation, but it's not too relevant. What's more relevant is to where are we at? So price action has come down into a previous level of structure. Right? You guys all see that? Looking left, if you see that yellow line? Looking left, we've come into a previous level of structure. So this is going to be called a decision point because price is going to make a decision. It can do one of two things at this level of structure. What are the one of two things it can do? It could do one of two things and only one of two things. Now, it may take a long time to decide which one of those two things it will do, but ultimately it will do one of two things. It can either what? It can either violate structure, which would be a break and close below. So imagine structure being a piece of paper and you just rip it, right? Or it could do what? It could hold structure, which is what we're currently seeing right now. So if price were to, right, this is still the identification phase, right? If price were to hold structure, what would our directional prediction be? Bullish or bearish? It would be bullish. If price action were to violate structure, what would our directional prediction be? Bullish or bearish? Bearish, right? You see how we just simplified this process, right? All this confusing analysis, we just made it really simple, right? Wait for price to do something, and then based on what it does, we predict this. If then, if then. This is how you take something that seems to be very complicated and make it simple. Some of you may be offended by how dumb and simple it is. I'm sorry. So, if you know what type of trader you are, you can already start setting up your thing, right? If you know like, hey, I'm only a continuation trader. So if you're only a continuation trader, you can care less about the bullish side of things. You're only looking for the violation. So you're saying if we violate, then blah, 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 blah. If you're only a countertrend trader, so if you're only looking for the hold of level, then you're only like kind of visualizing and playing out the buying opportunity here, and you can care less about the selling opportunity, right? If you're a trader that does both, then you can play out both scenarios. That's what we're going to do here. So let's start with the bullish scenario. Let's say that we hold this level of structure, right? The first part of the prediction was what direction are we likely to go in? The second part of the prediction was, if we go in that direction, where are we likely to go to? So I'm not going to have you guys answer this, but this would be my prediction of where we're likely to go to. We're likely to go up into this level. This may or may not offer a trading opportunity. We'll dig down to the lower time frame to see if it does. But this would be the bullish move. If we violate that level of structure, right? Look left, structure leaves clues. Then I would predict that price action is likely to go down to this level. Chart. Which means the move would be from there to there, right? So I've laid out the entire trade, guys. I know exactly what needs to happen in order to think bullishly. I know exactly what needs to happen in order to think bearishly. I know that if we go bullishly, I know where I'm expecting price to go to. I know if we go bearishly, I know where I'm expecting price to go to that way. So the job is simple. We just have to wait. All right, so we know that we're waiting for an answer here on the hourly, right? Now, here's the confusing part about trading, right? You go down to the 4 hour, or let's go down to a 50-minute chart, and you can see we have a hold right here. If you're shooting for a bullish opportunity, right? Again, here's our zone. Do you guys see any real room for profit here? And again, this is the confusing part about trading, is sometimes you get these good ideas, but they just don't actually have enough to take the trade. Is there any room for profit if you're doing a higher high, higher close? Probably not. We can bring some volume in, but my guess is it's going to be choppy the entire way through, congested the entire way through. Maybe you shoot a little bit higher, maybe right here. But there's just no way I can see you getting a good risk reward. So an alternative way is wait to see if we get a double bottom. Right, so if we're looking at this trade right here, we're looking at a move. I got the moves right. That looks like this. Let's say higher high, higher close right here. Targets here. If we're keeping with our ATR based stop loss, ATR is 12. Low is what? 20106. So that's going to be 94. Would be our stop loss. You can see very, very bad risk reward. Poor. Probably don't want to take this. However, if you wait for maybe a double bottom, which could occur, right? Maybe it completes down here, and all of a sudden that gives you an alternative reason to get involved, and you may be able to get a good risk reward, right? So if you have alternative ways for entry, it's always good to go through that checklist and be like, hey, if aggressive entry doesn't work, still wait for conservative entry. So that's a way you can get involved. On the downside, what we would need now is where originally we were looking for a violation of this yellow line. Because we put in a new low, this is now the new low watermark that needs to be violated in order for us to have that violation of the trend, right? Assuming, unless we end up getting it on an hourly. So what you would need for the bearish scenario is if price action breaks and closes below this level, then if you're a breakout trader, then you enter next bar market, whatever like that. If you're a pullback trader, then wait for a pullback and that chance to trade it down. So what we've done is we've played out both scenarios already in our charts, in our heads as well. And what that does is it removes, right, the panic of trading. It removes the, oh my gosh, what do I do? Do this, do that, push button, right? We're cool, calm, and collect. We are just following our code. If this, then that. If this, then that. If this, then that. And we're operating like a mechanical beast instead of a scared human being. And this is why you want to have that process, understand that process, and most importantly, follow that process. This is a decent move on Aussie New Zealand's a weird pair, consolidative, but we just had a breaking close above these highs. So as another continuation trade, I would expect price to continue. If we break and close above previous structure highs, then I predict that price is likely to go higher. If we're likely to go higher, where are we likely to go higher to? Bigger picture, I would say this level. Smaller picture, I would like to isolate this level right here. Of course, if I want a truer answer, and I'm going to say 15 even is probably going to be the spike, but we can bring our volume profile in once again, and let's see what it tells us. What did I tell you guys? Did I not tell you earlier, if you're good at identifying structure, you can pretty spot on identify where the volume's at? Did I not say 15 even? Yeah. I haven't looked at this. It's just like it just shows you, like, if you and I've been doing this for a very long time, obviously that helps, but if you master the skill of technical analysis, it truly shows you how indicators are just, they indicate what price tells you. They're supplemental, they're good, they're helpful, but like, your eyes is the greatest indicator. So yeah, speaking of the void here, going off our earlier conversation on volume profile, right? And I guess connecting to the IPDE conversation we just had, identify break and close above structure, predict bullish move. If we're going to go bullish, where do we go to? We've already kind of pinpointed our level. We have a 115 even handled number, psychological gap, or psychological level. And we have a big void in volume. So again, there's three ways price can get there. Which of those three ways are we currently doing right now? All right, so we have a pullback. So now you're asking yourself the question, okay, what is my entry reason? What do I need to enter? Do I need to go down to a lower time frame? Do I need higher high, higher close? Do I need double bottom? Do I need this? Do I need that? Do I need to go to a range bar chart and get a different perspective of this? Right? These are things that are all going to be within your trading plan. Do I need RSI to go oversold? Right? Whatever you need. Now, the next part is simple, but maybe complicated, as we spoke about with Dollar Canada. Now you wait. You wait. And if price gives you what you need, then you buy. If price doesn't give you what you need, then you stay out. It's as simple as that.